All right, welcome to this intensive study session. We're going to dive right into the essentials of accounting, specifically to get you ready for your multiple choice exam. Our goal here is to break down the core concepts you absolutely have to know to do really well.
So, what's our game plan? First, we'll cover the core concepts, the basic vocabulary. Then, we'll look at why accounting is so important and who actually uses it. After that, we'll get into the fundamental rules that govern everything. We'll also touch on the different types of accounting. And finally, we'll put it all to the test with a practice round of questions. Let's get started. Okay, first things first. We have to start with the vocabulary. You can't really answer the questions if you don't speak the language, right? These terms are the building blocks for everything else we're going to cover.
Let's start with bookkeeping. The easiest way to think about this is as the daily diary of a business. Every time money comes in or goes out, a sale, a purchase, paying a bill, it gets written down. This is the detailed day-to-day data entry that makes sure nothing gets missed.
Now, if bookkeeping is the diary, then accounting is telling the story based on that diary. Accounting takes all that daily information and does something with it. It analyzes it, summarizes it, and turns it into useful reports that people can use to make important decisions. So you see, bookkeeping is a part of accounting, but accounting is the much bigger picture.
And finally, we have accountancy. Think of this as the rule book. Accountancy is the body of knowledge, the theories, principles, and standards that tells accountants how to do their job properly. It ensures that everyone is following the same set of rules, which is incredibly important.
It's really crucial for your exam to understand the difference between accounting and accountancy. This table lays it out clearly. Accounting is the practical process of recording and reporting. Accountancy is the theoretical knowledge behind it all. So one is doing the work, and the other is the set of rules for how to do the work. This is a very common topic for exam questions.
Okay, so we've got the basic terms down. But why do we do all this work? Who is this information for? Let's talk about the purpose of accounting and who its main users are.
As you can see, a lot of different people need this information. You have the internal users, like managers, who use it to make decisions about the company's future. But then you have all these external users. Investors need it to decide whether to put money into the business. Banks need it to decide if they should give the company a loan. And of course, the government needs it to make sure the company is paying the right amount of tax.
We won't spend much time on history, but it's useful to know that accounting has been around for thousands of years. The modern system we use today, called double-entry bookkeeping, was really established back in 1494. The profession as we know it really grew during the Industrial Revolution, when businesses became much more complex.
All right, this next section is critical. We're going to cover the fundamental principles, the basic rules that all accountants must follow. You absolutely have to know these for your exam.
The first rule is the separate business entity concept. This is a big one. It means that the business is treated as its own person, completely separate from its owner. Even if you're the only owner, your business's money is not your personal money in the eyes of accounting. All records are kept from the business's perspective.
And here's an MCQ alert. A common exam question might ask something like this. If an owner takes cash from the business for personal use, does it affect the business? The answer is a definite yes. Why? Because the business's cash has gone down. The business has to record that its cash was given to the owner. They are two separate entities. Next up, the going concern concept. This is a simple assumption that the business will continue to operate for a long time into the future. We don't create financial statements assuming the business is going to close down next week.
And here's another MCQ alert for you. This concept is the reason why we record assets, like a building or a car, at the price we paid for them, their cost. We don't record them at the price we could sell them for today. Why? Because we assume the business is a going concern and will use the asset for many years, not sell it off in a hurry.
Now for the dual aspect concept. This is the foundation of all modern accounting. It simply means that every single transaction has two effects. For example, if a business buys a new computer for cash, two things happen. Its assets in the form of computers go up, but its assets in the form of cash go down. This two-sided effect is what we call double-entry bookkeeping.
And this concept leads us directly to the single most important equation in accounting. Assets equals liabilities plus owner's equity. All it's saying is that the things a business owns, its assets, must be equal to the claims against those assets. Those claims come from two places, lenders, which are liabilities, and the owners, which is equity. This equation must always be in balance. Memorize this one.
Okay, so we've got the basic rules down. But accounting isn't just one thing.
There are different types of accounting for different purposes. Let's look at the main ones you'll need to distinguish between for your test.
This table breaks it down nicely. Here's a simple way to remember it. Financial accounting is for external users, people outside the company, like investors. It reports on the past. Management and cost accounting are for internal users, the managers inside the company. They are focused on making future decisions. So financial is for outsiders and looks back. Management is for insiders and looks forward.
All right, we've covered a lot of theory. Now it's time to see how well you've understood it. Let's try some exam-style questions to put your knowledge to the test.
Okay, here's the first one. This concept states that a business firm will continue to carry on its activities for an indefinite period of time. Your options are A. Cost concept, B. Going concern concept, C. Dual aspect concept, or D. Business entity concept. Take a second to think about your answer.
If you chose B, going concern concept, you are correct. That's the exact definition. But for your exam, it's just as important to know why the other answers are wrong. A is wrong because the cost concept is about valuation. C is wrong because dual aspect is about the two-sided nature of transactions. And D is wrong because the business entity concept is about separating the business from the owner.
All right, let's do one more. Business and owner of business are two separate entities is defined by blank concept. Your options are A. Business solutions, B. Business performance, C. Business entity, or D. All of the above. Think carefully. The correct answer is C. Business entity concept. This is another direct definition of one of our key principles.
Okay, let's wrap this up with a quick, high-yield summary. These are the points you absolutely must remember for your exam. First, accounting is the process, accountancy is the rules. Remember the key principles. Separate entity means the business is not the owner. Going concern means we assume it will continue. And dual aspect means every transaction has two effects, which keeps our main equation in balance. And finally, financial accounting is for outsiders, while management accounting is for insiders.
As a final thought, I want you to consider how these rules apply in the real world. Think about a manager deciding whether to buy brand new equipment or just repair the old machine. How would principles like the going concern concept affect that decision? Thinking about these applications will really help you understand the material on a deeper level. Thank you for joining this session and best of luck on your exam.